Hi, my name is Rob Noonan. I am a Rialto Markets co-founder and your host for our latest webinar, Rialto Markets and Issuance, Empowering the Private Securities Market Together. Alongside me, I'm delighted to have a fellow Rialto Markets co-founder, Joel Steinmetz, our Chief Operating Officer. As you probably know, Rialto Markets is a fintech pioneer operating as a broker-dealer with a difference, having deployed our own alternative trading system for private securities in the secondary market. We have also just launched an enterprise solutions product using our technology and infrastructure to deliver a customized white label trading operation for our clients, offering their own InvestNow technology and API infrastructure hosted on their website. This can further personalize to add ease of use and flexibility, allowing private companies to control their customer and investor data and build their own investment and secondary trading communities within a secure and compliant environment, using the power of our alternative trading system, or ATS for short. We're delighted to be joined by Darren Marbles, CEO and co-founder of Issuance, an exciting fintech company launched in 2018 that has become a leading provider of SaaS solutions for equity crowdfunding issuers who leverage the power of Reg CF, Reg A+, and Reg D exemptions. Issuance has helped raise more than $250 million for its customers to date. Joel and Darren are going to be talking about the new strategic partnership between our two companies and how it can speed up the entire crowdfunding investment process and drive the cost savings for issuers and investors. But first, a little background. Darren is a serial entrepreneur who is also co-CEO and co-founder of Crush Capital, a fintech firm aiming to democratize access to investment opportunities and usher in a retail investor renaissance. He was previously founder and CEO of CrowdFundX, a financial marketing firm that pioneered direct-to-investor retail marketing using the Reg A+ securities exemption. The company was acquired by Issuance in 2019. He is also a co-founder of the Crowd Invest Summit and contributes to Business Insider and Inc. magazine. Our own Joel Steinmetz is no stranger to new technologies that have shaken up the financial markets. During a career including senior positions with Citibank, Citadel, Instinet, and Liquidnet, he helped pioneer several major public market trading systems. He is now involved in doing the same for private markets with Rialto Markets. His team has helped build 9 of the 16 alternative trading systems for the likes of Goldman Sachs, Deutsche Bank, and Citadel for the public markets, and now is doing the same to democratize trading and investment for private markets. But before we hear from Joel and Darren, let me set the scene for what we're going to discuss and share today. It's the best of breed versus one-shop path that issuers can take when they seek investment in their companies. Joel and Darren will argue for best of breed, the approach our companies are working towards with this new strategic partnership, an alliance of experts in the key areas required: the broker-dealer, the online software platform, the lawyer, and so on. The other side is the one-stop shop in which no one knows the qualities of the individual components under that single roof. But before I let Darren and Joel take the floor, let me stress that the members of the audience are welcome to get involved by placing your questions in the chat. We will feed them in as we go. We will add them to the Q&A or we will follow up with you afterwards. Also, the webinar is being recorded and will be available in full on our YouTube channel in the next few days. So now I will turn to the panel by asking Darren about Issuance, how it began, what it offers, and your success and profile so far. Darren?
Rob and Joel, thank you so much for having me on the webinar. It's a pleasure to be with you here today. And thanks to everyone who's joining. We've got an incredible turnout. We don't take it for granted. So thank you for your time. I'm the co-founder and CEO of Issuance. Issuance is a fintech company. We have a software platform that facilitates Reg A+, Reg D 506C, and now Reg CF offerings. We recently completed an acquisition of a FINRA registered funding portal, so we're now a full stack platform. What we're known for in the industry is having the fastest investor checkout industry-wide. So we are exclusively focused on offering a superior investment platform in a white label model that allows our clients to run their entire financing on their own website, have complete control of the landing page, the template they use, and be able to process investments from both retail and accredited investors at scale. And this is the only thing we do. We don't want to be a broker dealer. We don't want to be your transfer agent. We don't want to be your marketing agency. We think the one-stop shop is an incredibly flawed approach to the online capital raising industry. And we think it puts companies, you who are running these businesses, watching this webinar at a real disadvantage. And that's one of the themes we're going to talk about today. But very excited to have Rialto as a partner to Issuance. And one of the reasons behind this partnership is to drive a lower cost of capital for the industry at large. One of my criticisms, of our industry, and I think it's fair to be critical of your own industry, we've got to find ways to improve it, is that a lot of platforms in this space will charge fees 7, 8, 9%, or the fees will net out to 7, 8, or 9%. And I've always thought that's criminal. Why would a company pay 7 or 8% to convert its own customers into investors? It's illogical. The reality of this industry, guys, is nobody is raising capital for you. You're raising capital for yourself. If you're the founder or CEO of a company running a Reg A financing, for instance, you have to do the marketing. You have to turn your customers into investors. You have to allocate budget to create awareness for your offer. And I don't think you should pay 8% to anybody in this industry to convert your customers into investors, or to convert interested investors that you're attracting through a marketing campaign to investors. So part of our objective in partnering with Rialto is to drive a lower cost of capital than any other one-stop shop or combination of partners for the benefit of you, the issuer, in an online capital raise.
Thanks, Darren. Yeah, the speed for the investor and the control for the issuer is really something that's important to all of us. Joel, I'm going to move over to you. Could you give us a brief update on Rialto Markets, what we're seeing with the private securities market, as well as an overview of the checklist facing a private company issuer coming into the market to raise capital today?
Yeah, so I think that's an important background is to figure out exactly what's going on in the private securities space. It's just growing, and it's growing by leaps and bounds. And it had historically had poor operational efficiency and poor efficiency in general. And our goal when we began Rialto was to be able to bring some of the efficiencies, operational and cost efficiencies, that exist in a lot of the public markets to the private sector, to the private securities market. And we are not, to Darren's point, we're not planning on doing everything. We don't feel that we on our own can conquer the world. So we focus on areas that we think we're expert at within the regulatory framework of a broker-dealer, within the regulatory framework of an alternative trading system, and within the technological framework of a fintech type technology company. And we're going to swim in our lane. So the idea is to be able to look at private securities markets and say what exists today in order to create opportunities. Democratization is a word that's used often, but opportunities for the broader investor base within the US and worldwide. But where are the opportunities, and how do we create the opportunities to invest in investments that until now have been unavailable to many in the private securities world? And in addition, to be able to look at issuers and say, how can we expand your reach to the investor community? It does go both ways. And so we need to be able to create a whole bunch of things within the operational workflow. And that includes the technology, the platform that Darren spoke to. It includes some of the payment rails. It will include the lawyers, as Rob had said earlier. It also includes some of the assurances of, or the backing, if you will, of broker-dealers, and perhaps a secondary trading system and the ability to trade in the secondary markets. So our goal is to be able to look at this fast-growing private securities market. Often alternatives are used, but it's really just getting into assets that have not been available to the retail segment, or some even on the what you might call lower end of the institutional segment, and give them access to these investments. What we have been seeing is a lot of traction in Reg CF, Reg A, and Reg D securities, and people going to the private markets and using regulation to get there. We're also seeing, I don't think I have to tell anyone about what's going on with a lot of the regulations these days. We're seeing greater interest in figuring out how to do this within a regulatory framework. And we're also seeing broader systems of people that are saying, I have 10 deals, I have serial issuances to go out. And if I can create an operational efficiency, technological efficiencies to be able to issue those securities and get investors in cleanly and, as Darren said, at scale, then I've accomplished my goal to be able to broaden the universe of investors that are able to invest and broaden the investments available for investors in which to invest.
Thanks, Joel. Yeah, I think you'll both agree with me that we would rather partner with someone that's an expert in their field than learn how to do something from scratch that we're just not going to be as good at. I think it's just a better way to go about it. Darren, you mentioned that you had a short video that you wanted to show for issuance and how your system works. Would you like to pull that up?
Sure. No, thank you, Rob, for the opportunity. So maybe just taking a step back, the insight that issuance has had in this industry relative to an investment platform is that the single factor that matters more than anything else is speed of checkout, right? So our client is the issuer. We're licensing the software to companies raising capital online. But the real customer is the investor. And what we determined is that a system with the fastest investor checkout would win. Why is that important? Well, let's imagine a company that has 100,000 paying customers. They send an email over and over, a drip campaign to their paying customers, marketing their securities in a Reg A offering. They've just gotten qualified by the SEC. Some percent, 5%, go to a landing page. 5,000 people are interested in investing. They click an Invest Now button. Now, the speed to checkout is what matters most. So intuitively, a system that has fewer clicks, fewer steps, fewer screens is going to help that company convert more of those 5,000 investors than a system that has more clicks, more screens, a 2 to 3, even 4-minute checkout process. Some of the platforms in this industry are very antiquated. They make the investor feel like they're opening an old school retail brokerage account. And when people go through a cumbersome checkout process, a lot of these people will drop off. It's too much. So I'm going to give you a quick example. A week ago, Saturday night, 11 p.m., I'm on Instagram, I'm scrolling through a feed, and I see an ad for, truthfully, sour licorice, blue sour licorice. I'm a sucker for the sour candies. I click through, and within 5 seconds, I used Shop Pay to check out for a $10 thing of licorice. 2 days later, it showed up at my door. I didn't have to put in my name, my email, any of it. My information stored on my phone, and that's how people expect to shop online. That's expected. But in the securities business, there's these cumbersome systems and processes that make it hard for people to buy the securities of a company they want to invest in. So issuance has a vision for a one-click checkout for securities. That's our vision. Visions are supposed to be big, maybe even unattainable. We may never get there, but we're going to strive to get as close to that vision of a one-click checkout as we can, because we know that the easier the system is to use, that means our clients are going to raise more capital at a lower cost. They're going to convert more investors in the funnel. They're going to have a higher return on ad spend, and they're going to have a lower cost of customer acquisition. So I'm going to show you a demo of our Reg A investment process from the moment an investor hits a landing page for a deal, which is the issuer's page, their website, and they click the Invest Now button. And I'm going to talk you through it here. So you should be able to see my screen. I'm going to go full screen, and this is the first step of the investment process. So the investor has clicked Invest Now. Step one is they're inputting their email, their password. They click Continue. We do not send these people back into their email to click on a link. We do not ask for a CAPTCHA. We think that's ridiculous. This system is designed for speed and ease of use. The system will default to the most common answers to questions based on years of running these offerings. We've made this system so you click a share amount versus type in a number of shares or dollar amount. What you saw on the last screen was 3 preset investment amounts that are predetermined by the issuer. This is obviously a desktop version, but the system recognizes that the user has made a purchase from their desktop before, so the investor just has to click. They've got their credit card information saved. It auto-populates. And by the way, what we've seen is that when we collect information up front from the investor, there's a much higher conversion rate when we're asking this investor for their basic information, their name and address, versus putting the payment information at the end, which is what all of our other competitors do. You'll see again here, common answers to questions are defaulted. Now I'm already at the subscription agreement. I can review it. I can print it. The system prompts me to sign, type in first name, last name, and I'm done. That's the fastest checkout in the entire online capital raising industry. And if that investor were on a mobile device, they would be able to buy shares in a privately held company using Apple Pay or Google Pay. Now, KYC and AML are being run in real time on the back end. It's invisible to the investor. The investor doesn't even know they're being KYC'd AML. They're only notified if there's an issue, if they don't pass KYC AML. So we don't send people back to their email. We've defaulted to the most common answers in this workflow. We don't want the investor to have to think too hard. We don't want them to have to go pull out their credit card information and type it out. That's an old school way of processing investments. And the reason we've been able to get this checkout down to about 40 seconds, if I weren't talking through it, is because this is the one thing we do, right? And this is a problem that we see in this industry. And I should be off of the demo right now. So I'll go back here. The problem I see in this industry is that companies, platforms are trying to consolidate so many functions under one umbrella, and it doesn't work. And here's why. In traditional capital markets, there's no such thing as a one-stop shop for an IPO, is there? No, you have an investment bank, you have an underwriter. They're going to do a best efforts or a firm commitment underwriting. The underwriter plays a very specific role. There's a securities attorney that files an S1. There's an audit firm that gathers years of audited financials. You have an Edgar agent. You have a printer. You have an investor relations firm. Is there any firm that you're aware of where all of those functions operate under one umbrella? No. Now, why is that? Because capital markets require specialists. And what we see in this industry is even a company that has a platform and a broker-dealer is at a disadvantage to serving you, the issuer. And let's think through this for a minute. Imagine a platform that's a software function, right? This is a software system, now runs a broker-dealer. Those are two completely different skill sets. The software developers who are building the platform add zero value to the broker-dealer. The broker-dealer needs to be licensed by compliance experts, by registered reps, people who spend years studying, taking tests, getting licensed to operate a broker-dealer. And the people that run the broker-dealer are not software developers. Yet we see companies claim to be your broker-dealer and your software platform, and now your transfer agent. And what that means is that you're going to pay the price. You're going to raise less capital. You're going to have confusing audits and invoices from these companies because they, by definition, cannot be the best at doing all these things that don't have any relation to the other. This is the reason why there's multiple parties involved in an IPO. And this is the better approach to raise capital online in a Reg A plus financing. So our system is seamlessly integrating. We can integrate with any broker-dealer, any transfer agent, any marketing firm, but we're preferring to work with Rialto because they're offering issuance clients discounted pricing that will let you, the issuer, raise capital with the lowest cost of capital industry-wide. You're going to get the best broker-dealer partnered with the best platform and have more success raising capital. That's the approach that we're taking to the market, and that's how we think. And by the way, not just thinking, This is how the most successful companies in the industry, companies that are raising 30, 50, 60, 70 million dollars, are operating their deals. They're working with specialists to get the most out of firms like Issuance and Rialto. And we can integrate with Rialto in minutes. There's no project, there's no setup, there's no customization. The system is designed to seamlessly plug and play with leading broker dealers like Rialto. So that's how the system works, guys. I wanted to show you that. I appreciate the opportunity. And that's a little more thinking in terms of the reason we've partnered with Rialto and why we think companies will have more success raising capital online, taking a best of breed approach versus attempting to work with a company that claims to do it all.
Yeah, I agree. And I'm going to need you to talk to some of my doctors because it's infuriating filling out those forms every time you go to the same doctor. So yeah, we've all felt the pain of filling out forms, and that's great. Darren, I'm not sure if everyone's seeing this the right way, but the screen still has us three on the left, like you're sharing your screen, but it's blank. I don't know if you have to do anything. But in the meantime, we are getting some questions in, and I think I'd like both of you first to just talk about the specific Issuance Rialto partnership and how we help each other. And then I'll go through some of these questions. I'm guessing that you're going to answer some of them just in your comments, but I'll keep with you, Darren, if that's okay.
Yeah, absolutely.
Go right ahead.
Sure.
Talk about
we've got a partnership with Rialto, and Rialto has agreed to offer discounted fees for any deals that Issuance refers over. We see a question here specific to what those rates are. You can email the Rialto team. You can contact them today to find out what that discount is. But the bottom line is you will get a discount relative to what the industry standard fees are in this market. And the reason we're thinking this is important is because the cost of capital in these campaigns is notoriously high. Companies are willing to pay a higher cost of capital on average to raise 5 or 10 million in a Reg A, have the flexibility of setting their terms, retaining greater ownership and control of their deal or their company. I talked to a company yesterday. They raised $20 million in a Reg A, different platform, not Issuance, unfortunately. You know what their cost of capital was when it was all said and done? 25%. 25%. That's insane. You know, millions and millions of dollars spent with platforms and broker dealers. And the individual who's the CEO of this business says he regrets doing it. I would regret that too if I paid out $5 million to raise 20. So we need to usher in an era of low cost online capital raising. That's the only way, one of the only ways this industry will grow, right? One is these campaigns need to be fast, easy, and cheap to launch. And then the bigger picture for me is I'm a big believer in investors making money. This industry will certainly not grow if the retail investor who's buying into the deal doesn't earn a return once in a while. So the quality of the deals is incredibly important. The due diligence that goes into the process to take a deal on the Rialto or Issuance side, incredibly important. But on the cost side, the pricing side, we need to usher in a lower cost model to drive the growth of the industry.
Right.
Yeah. So I'll weigh in on some important, I think, emphases. Nothing new probably from what you just heard, but that concept of driving costs down is very important. And the industry itself, through its technology, through operations, and frankly, through some regulatory changes, has helped drive those costs down or potentially drive those costs down. The question is whether that's actually being delivered to the issuer. So we looked at it and said, well, if there's someone who actually is going to work directly with us, who's going to make the integration smooth, who is going to actually perform a lot of the technology functions that we now do not have to perform because we're actually connected and we have that connection with them, it makes the cost go down for everybody. And instead of us just saying, well, we're able to charge the same amount and we'll just make more because we're not doing the same amount, we've basically said, well, let's see if we can make this a win-win for everybody. and create an operational, like I said before, an operational and a cost efficiency that drove down public markets 20 years ago, and is now driving down private markets. And that's what we're trying to accomplish, is how do we make sure the experience, the customer's experience is the smoothest, the workflow is the most efficient, and part of the efficiency equation is cost. And so how do we make sure that works? Now, I know there's been some questions that I saw before that deal with, well, what does this do for the industry? Just imagine if you're a company that's looking to raise $20 million, like the example Darren gave, and you don't have to have 5 million go out, you're able to keep whatever, any amount of that, more, 1 million, 3 million, 4 million, whatever the number is that you're able to keep for yourselves. Imagine what you can do with that money and how you can build the industry and how you can build your company so much more. How much more marketing you might be able to do that give more investors the opportunity to come in. There are so many things that can be done that it really has ancillary impact on the benefits that are delivered to any given issuer.
Yeah, these are early stage companies. Every penny counts. It's just so important. I'm going to start turning to the questions in the audience. Please keep them coming. We'll try to get through all of them. If we don't get through them, we'll try to contact you directly. If you arrived late or you missed the end, again, the webinar will be available on the YouTube channel in the next few days, and we're going to send out a webinar replay via email. Darren, I think you handled this a little bit, but the question from Lily is, how does the Issuance Express white label platform provide issuers with greater control over their investor relationships? And then Joel, after Darren goes, what role does Rialto Markets play, and how do we fit in?
Sure. So one of the big differences between issuance and a traditional marketplace or listings platform is that our clients are running their financing on their own website. And that's the antithesis or the opposite of listing your deal on a traditional marketplace platform where you launch and you're instantly competing with 100 other companies, maybe more, who are also vying for attention, trying to raise capital, in theory, from the same investor base as you. And I should just be clear, the biggest lie that's told in this industry, one of the biggest lies, is that if you launch on a marketplace platform, somehow you're just going to raise capital because this platform's been in existence for years. We hear this every week. Well, I heard that this platform said if I launch my deal, I should expect 1/3 of the capital to come from the platform's investors. Well, let's think through that. If you go to any one of these platforms, then by that standard, everybody should be at 1/3 funded. So the company that wants to raise 10 million should have 3 million. The company that wants to raise 1 million should have 300,000. But we all know that that's the furthest thing from the truth. Yeah, these companies start at zero and have to do their own marketing. So one of the advantages of this white label model that we employ is that you control the brand, you control the landing page. You're not stuck in a generic campaign template. You can use your color scheme, your font scheme, but you own the investors. And this is the other thing that a lot of these marketplace platforms are guilty of. You get 100 investors that click invest on a listings platform, and before those people have even signed a subscription agreement, the platform's marketing their own securities to your prospective investors. I think that's outrageous. So we don't exploit investor data. If we have a client that raises 70 million, like we do have a client that's raised $70 million from 17,000 non-accredited retail investors, those people aren't getting marketing communications from Issuance about 5 other deals we're doing. And that's really important. So one of the value points is we don't exploit investor data. You run a campaign, you own the investors. We're not remarketing 5 other deals. You control the template. It's your domain. It's your brand. You're not commingling your brand with 100 other companies. And that gives you ownership. It gives you control of your own campaign and control of your own destiny.
And so I'll weigh in on the Rialto side of it. So you've finished now through that process on the technology side, but it's important and actually necessary in a lot of places to make sure that there's a regulated entity that is also going through that process of checking each of the investors, vetting them to make sure they pass the AML KYC necessary tests. But all of that, ultimately, I think the key component, Darren was saying, is the information is owned by you. Information is so important and so powerful in everything you're doing, not just in raising capital, but in your business itself and in getting your customers to come in. Well, owning that information and personally owning it as the issuer is an essential element of assuring that you can not only get this raise done, but you can continue building your business. If you need another raise, you have a lot of that information in front of you, and making sure all of that exists is just essential. Additionally, where Rialto comes in as well is there's an important element of the workflow. There are a lot of different component parts here. There are payment rails that have to be included. There are transfer agents that have to be included, and broker dealers. There's the technology, etc. All of these various parts make up the entirety of the puzzle, and assuring that all of them are under an umbrella so that the infrastructure is seamless to the investor. They just have to go through, as Darren said, the easy way of going through the experience as quickly as possible and assuring that they, at the end of the day, their investment is completed in a regulated way. That makes the experience so much better and worthwhile for the issuer, so that they're not only getting the investment, but they might even get more of an investment.
Yeah, I agree. And Darren, it's at least my belief that just because you buy Amazon stock doesn't mean that you're going to be interested in Tesla shares. One has
Very
nothing.
good, astute observation.
Yeah. We're getting a few questions. Let me go here first. It's asking about competitors, and I really want to nail home, because it's a huge belief of ours, that it's your data, it's your information, that that you're not going to be lost in the shuffle, like you said. So I think that there's competitors out there that do things differently, and can you both talk to, especially the data, and it is infuriating when you have people click on your tile and you don't know who they are and you can't market to them directly. And I think it's just so important. So I'd like to just talk about this a little bit more, if you don't mind.
Sure. Look, there's platforms out there today, some of the earliest platforms that have been live and open for business since 2016, 2015. These platforms will fight you and make it challenging for you to access your own investor list. And sometimes they'll say, we'll give you the list when the campaign closes. Well, that doesn't make sense, because you need access to those investors in real time. All of these campaigns are digital marketing campaigns. There's a funnel. If you're not given access to your funnel, then what are you doing? Right? It's a mistake to try to run an effective marketing campaign. You bring in an e-commerce expert, they'd say, this doesn't make sense. You don't have access to your investor list. You get that at the end of the process. Well, I need it now. The marketers need to understand where the investors are in the funnel. You, as the issuer, need real-time visibility into your investor funnel. Where did the investor drop off? On the first screen, the second screen, when they were asked to put in their credit card or payment information? That's critical information. And so we believe that data needs to be available in real time, in the middle of the campaign, so you can drive a better outcome and empower your marketing team or your marketing partner or agency with the information and data they need to drive a higher conversion rate, a higher return on ad spend. And then we just said this a few minutes ago. We just don't think that it's right for platforms to take your 5,000 investors and market 100 other deals. Now, interestingly, once in a blue moon, I'll talk to a CEO that says, what do I care? I raised my money. I don't care if XYZ platform sends an email to my investors. I think that's a very rare perspective. I think most founders and CEOs hate that. They don't want their investors to be marketed to. I've got 100 investors between my two businesses, Issuance and my show going public. I don't want somebody sending emails to my investors. My investors are some of the most valuable relationships in my business. These are people I've spent years earning their trust and respect. And I've gotten on planes and flown to New York. I don't want somebody sending them emails marketing their deal. You shouldn't either. So protecting the integrity of your investor base, your database, is a core value at Issuance. And it's one of the differentiators. It's just something we're not willing to sacrifice in these campaigns.
Yeah, and waiting till the end of the campaign to get those lists does not help your marketing while your deal is live. It just doesn't really make sense to me. Joel, are you still there? Looks like you might have lost internet.
And I can answer another question from
Sure.
Johan here, Rob. The question
Go right
was,
ahead.
would investors have to upload ID for KYC AML?
Yeah.
The answer is no. We don't need the front and back of your ID to complete an investment. But if the investor does not pass KYC AML based on the original data we're collecting in the flow I just shared a few minutes ago, then we may ask you for your ID. So these systems don't need IDs to run KYC AML. We've figured out a way to run KYC AML without the front and back of your ID. And there are competitors that will ask for that information by default because they haven't figured it out technically how to run proper KYC AML in a streamlined fashion. As you can imagine, that's a friction point. If somebody asked me for my ID as part of a sign-up process, I might think twice before investing or buying a product. Why do they need my ID? What are they doing with that information? So the objective is to make it easy for the retail investor to check out in a compliant manner. It's not just speed and ease of use. There's a compliance factor. These are securities, highly regulated industry that Issuance and Rialto are operating in. KYC AML have to be run on every investor. There's an integration that happens between the platform and the broker dealer that's critical. And that's why Rialto is such an important partner to Issuance in our business model and our clients. They provide a valuable compliance and administrative function in a deal that's, valuable to any Reg A issuer. And they're offering it at a discount, right? Again, driving that lower cost model. So those are a few additional thoughts.
Yeah, I think there are certain instances, especially if you're overseas, where it might be more required. But yeah, it is frustrating. Joel, I wanted to go to you. Chris is asking, is this a wise choice for Reg D offerings? And David is asking, is it what the AML KYC process to make a Reg D 506C compliant, which of course you can't go to the retail public, but can you talk about that for a bit?
Sure. So firstly, Reg D, Reg A, Reg CF, all of those are available. The systems are built to be able to handle any of those types of securities. But each one has its own nuances from a variety of ways, including what you can market, what you can say publicly, which customers you can target, what kind of AML KYC needs to be done. For Reg D, for example, we're going to check to see if you claim you're a accredited investor, we're going to have to validate that. We have to check what exactly that is. Is it a wise choice for Reg D securities? I'm going to speak, and maybe this is out of turn, maybe Darren will disagree, but the simple answer to that is it's not all Reg Ds or all Reg As or all Reg CFs fit one model. You have to figure out what is best for your individual situation. What are you looking to do? How much you're looking to raise? Do you have any investors in your back pocket already? Remember, as Darren had said earlier, you're going to go out to the marketplace in order to find these investors, and you're going to have to hire people to help you attract those investors. Now, if you have a very large customer base that's interested in becoming investors, more power to you. But if you're going to have to go to the market and find social media or other methods of outreach to to find those investors, the investor acquisition process, it's going to be very different if you're doing a Reg A, Reg CF, or Reg D. All of them have their own methods of doing it. So you have to figure out where you stand within that particular journey that you're taking from your capital raise, and then to determine what you need to do and if this is the right fit for you. The things to keep in mind is, I think everyone wants to own their data. I don't, to me, there are certain things that are, I don't know why there would be a difference. Owning my data, it's mine. It's if it's my data, I should own it. No one else should have it. Those types of things you have to consider as these are necessary. Efficiencies, operational efficiencies, good customer experiences, all those things. You can't say, well, I don't really care if the customer and the investor has a good experience. That's illogical. So there are certain things that are givens that we think are delivered. After that, you have to determine whether it's right for your particular issuance, and it might be right for this raise and not the next one, or vice versa. But those are the factors you have to take into consideration as you're making a decision.
Right. Thank you. Darren, I'm going to start with you. The question is from Bo is, does issuance have a size limit? And maybe I'll add to that and talk about, what your most successful deals are, if there's any rhyme or reason to why they're successful. I think I know what you're going to say, but maybe talk about some of your deals.
Sure. So size limit. Issuance doesn't discriminate based on the amount of capital a company is looking for. I would say the bulk of the deals we've done over the years have been Reg A plus. We recently, in early January, launched a Reg D 506C product, which has been rapidly adopted by a number of companies and clients. We're signing 2 Reg D deals a week right now, 506C. And then we're getting into the Reg CF space and launching our first offer in the next 3 weeks. So we're excited about that as well. We have been known for hosting some of the largest offerings in the industry. We have a client right now, an automotive startup in San Diego, that has cleared $70 million in capital raised from about 17,000 individual investors. And the reason this particular issuer has had so much success is because they're marketing to a built-in community of reservation holders. So the company's offering reservations for a solar-powered electric vehicle on their website. And then several weeks later, that reservation holder gets put onto a drip email marketing campaign where the company's now marketing their securities and their Reg A offering. And they've had 40,000 reservations for the vehicle, and now 17,000 people have signed up and bought shares. Very high average ticket value. I think it's like $7,000 or $8,000 is the average investment. And so we talk about this all the time. The companies that have the most success in a Reg A financing, for instance, are marketing to customers, fans, followers. They're marketing to paying customers. They regularly email those customers. They have a very active, vibrant newsletter community. And email is the primary form of communication, which makes it easy for them to send an email marketing their securities. And then that investor or that consumer can click through to the investment site, learn about the securities offering, the terms of the deal, the risk factors, et cetera. So we've had a lot of deals like that over the years. That particular client, we've seen them through 4 price per share increases. That's another excellent strategy. Rather than announcing a capital raise, announce the close of your dollar round. That's the savvy play. And so the announcement is, we're closing our dollar round in 45 days. And then 2 weeks later, we're closing our dollar round in a month. And so you're driving a close of an offering versus announcing that you're raising capital and you're trying to raise $50 million. Nobody's going to care about that, but they might care about the fact that your dollar round is closing and that you're going to reopen once that round closes at $1.20. And so with this particular automotive client, every time they announce a closing, they'll raise $5 million in 4 weeks. This company raises $100,000 to $250,000 a day. They are incredible marketers. They have an incredible product. and we've been working with them for over 2 years. And we're honored to be in deals like that. I saw another question. Will we see $75 million raises? Yes, I think there have been some on the real estate side. Yep. I do think we'll continue to see more. And Issuance certainly hopes that the caps are increased both for Reg A and certainly for Reg CF as well.
I just want to weigh in for a second on.
Go ahead, Joel.
I think that's important. We have actually speak to people very often about using the term community rather than crowd. And for the reasons that were actually just stated. If you have a community that you're able to go to, it's going to be a different experience than if you don't. If you have to go out and do marketing, that's great. There's going to be more marketing dollars that need to be spent in order to build your brand, et cetera, et cetera. But if you have a community, there is a different approach that you can take when you're doing these kinds of raises. And if you have a community that's a big fan base, very often a customer that loves your product is going to really want to be able to become an investor in that product. But it also works the other way. You can often have investors that turn into customers. So the goal is to be able to build community. And if you can build community, that's beneficial, we assume, for every issuer, no matter what industry you're in.
Yeah, it's really an amazing thing. That 17,000 people that invested in that company, Darren, they turn into ambassadors for the company. When you go to a party or you're with your friends, nobody cares that you bought IBM shares. But to be able to say you bought a company that no one's ever heard of and you're in on the ground floor, it makes it more interesting. Let's stick with marketing. It's a question that I tell people is my worst question. How much do you spend on marketing? And the question here is from David: how much of the $5 million raised went to marketing? And then William asks, do you assist with marketing to retail? So I'll go to you first, Darren.
So in that particular offer, company raised $20 million, $5 million went out the door to service providers. I think the marketing spend was about $1 million. And the other $4 million were platform fees and broker-dealer fees and call center fees, hundreds of thousands of dollars there. And the issuer regrets a lot of the spend there. The question of how much you need to spend to raise capital is a very good question. And the reality is nobody knows. Nobody knows what your return on ad spend is going to be in any deal, whether it's a Reg A, Reg D 506C, Reg CF, until you launch. I don't even think the test the waters data is good in these deals at all. Companies still do it. I understand the appeal of running a test the waters. Let's gauge the interest of the market. The data there is always off. People get the wrong idea all the time. They think they're going to raise 5 million, they raise 500K. And then suddenly the test the waters data they realize was bad data, because those aren't investors. That's an indication of interest if you're collecting that information in a test the waters offer. Issuance is a reseller of a handful of marketing partner services. So we get this question all the time. We demo our platform. Client says, this looks incredible. I've never seen a faster checkout. How do I market my deal? And then we will present a marketing package and resell packages on behalf of a handful of marketing partners that we work very closely with to help guide the issuer relative to their marketing strategy. And I think this is one of the most fascinating aspects of the industry and what's happening right now. We're seeing a number of new entrants come into the online capital raising industry that go well beyond the bounds of an agency or a digital marketing or a media buying firm. We're seeing data-driven firms. We're seeing AI-driven firms, AI investor marketing firms that are coming up with innovative strategies to attempt to identify and drive investors into deals consistently at a lower cost of capital with a higher return on ad spend. And what I'll say is that I think the jury's out. There's a lot of experimentation happening. I don't think there's a silver bullet in any one of these marketing programs. You really have to experiment and optimize and pay as you go and see what the results are. Some companies are going to turn $1 in marketing into $5 in investment. Some will struggle to get the dollar back. And there's a number of factors that will influence the outcomes here. And here's the truth. Just because you're raising capital doesn't mean you deserve a return on investment. What if your valuation is ridiculous? What if your company is too early stage and investors look at your deal and say, this company looks like it's a moonshot. How am I ever going to get my money back? There's 100 factors that are going in someone's mind when they're evaluating whether or not to invest in your company. So you have to think of this in not black and white terms. I want to find a firm where I'm going to spend $1 and get $5 back. You have to start looking inward. Is your deal a good deal? Do the terms make sense? Does the valuation make sense? What is the real opportunity for an investor to earn a return on their investment if they invest $2,000 into your deal? What kind of traction do you have? Do you have respectable revenues, or are you pre-revenue? Are you trying to raise capital at a $50 million valuation pre-revenue? Maybe you don't deserve a 5x return on ad spend with that deal. So a number of factors to consider, but the shorter answer is we resell marketing services, or we make introductions to marketing partners that we know and trust.
Yeah, and you said you have to experiment and optimize, and it's a different game when you own that data. I cannot emphasize this enough. When you have no insight as to why people are investing, it's a different animal. Joel, I want to get this question in for you because I know we talk to you talk to RIAs a lot, but the question is, can an RIA raise capital as well as sell traditional financial products?
So if you're looking at it from a broker dealer, I'll let Darren answer from the issuance platform itself. But from our broker dealer, we deal with private securities, and we will only deal with the issuers themselves. So the issuer has to give permission to allow those securities to be bought and sold by any of the subscribers we have. So if an RIA says, well, I have a certain security that I want traded on the Rialto ATS, for example, we will not do that unless the issuer has come to us and said, we would like to utilize the Rialto ATS. So we deal specifically in that area. We are connected to a lot of RIAs. We do the RIA community, we think, a service. We're allowing for additional issuances to be viewed and for their customer base to have access potentially to a different group of alternative trading opportunities. But again, it will be done via the proper, what we consider the proper methods, which is we're going to speak to the issuer. We're going to make sure the issuer is okay with everything trading accordingly. And therefore, if you're talking about traditional assets, the traditional asset is still going to have to go through the issuer for their direct permission.
Thanks, Joel. I'm going to close the questions there, and I'm going to go to the panel and ask for key points and/or key takeaways. Darren, do you want to kick that off?
Sure. So I think in summary, the reason we did this webinar was to announce a partnership between Issuance and Rialto. And the objective in this partnership is to serve the industry by lowering the cost of capital in an online capital raise. Rialto is offering Issuance clients preferred rates to give you the most effective broker-dealer services at a lower cost than standard, but also provide a best-of-breed solution to your capital raise. Rialto is a leading broker-dealer. Issuance is a leading investment platform. We work together seamlessly with Rialto to deliver a better outcome for our clients. So that was our objective in partnering. We've got the fastest investor checkout in the industry, and we've been able to do that because it's the one thing we focus on. We don't try to be a broker-dealer, transfer agent. We're just focused on being a fintech company. We think of ourselves as Stripe for equity crowdfunding or Stripe for online capital raising. Really important distinction, by the way. We don't go around saying we raised $70 million for an automotive startup. We say we've processed $70 million of investment from 17,000 investors, and we've made the system easy to use. It's idiot proof. We can get the investor from start to finish in about 40 seconds. They can even check out for shares using Apple Pay and Google Pay. And we're seeing that the most successful companies in the industry are taking a best of breed approach to their online capital raise. This is a better way to raise capital. You will increase your likelihood of success by using specialists whose firms integrate seamlessly than trying to find a company that claims to do it all, claims to be the best marketing platform, the best broker dealer, the best platform. Those three skill sets, totally disparate. They require different people to run, and it's a very complicated way to raise capital. By the way, I didn't mention this. The regulators don't like that model either. FINRA does not like that model. How do I know that? Because we get calls every week from companies saying, I've been waiting to get on XYZ's broker dealer. FINRA's got an issue. They don't like the way the broker dealer is being paid versus the platform versus the transfer agent. You want to play that waiting game? You could be waiting for 3 or 4 months to launch your deal. So the regulators don't like that approach either. But that's kind of the closing, and truly appreciate the opportunity, Rob, to be on with you and Joel. We're so thrilled to be a partner to Rialto and excited to help our clients jointly raise more capital at a lower cost.
Yeah, most people don't think of FINRA that way, but FINRA, that's one of the biggest things that they look at is how much are you being charged.
Kind of simply put,
Joel, final thoughts,
we've
takeaways?
looked at the private securities markets, and I think the whole world has been saying, how can we get this to be democratized? And it actually has been for quite some time, but not efficiently, not cost efficiently, and not operationally efficiently. And so the goal here is to make sure that we're able to deliver not only the opportunities because they now exist from a regulatory perspective through things like Reg A, Reg CF, but they're also available in a cost-efficient manner and in an operationally efficient manner for the larger audience. And if we can actually accomplish that goal, then the private securities market will benefit, because the issuers will be able to spread a much wider net of potential investors, and investors will be able to diversify their individual portfolios by having opportunities to invest in securities that they could not invest in before. And to be able to do that in a cost-efficient, customer smooth experience is the best world possible for private securities.
Agreed. Thank you, Joel. I'm going to wrap it up there. I'd like to thank the audience for engaging so much today. It's been really great. So many great questions. And of course, many thanks to the panel, Darren Marble of Issuance and Joel Steinmetz of Rialto Markets for their insights. Once again, if you have further questions, I see a lot of questions on commercials in there that we didn't get to. You can visit either or both of our websites, rialtomarkets.com and or issuance.com. And this will be replayed on the YouTube channel and the email campaign. So thank you, everybody, for coming. Bye.
Thanks, everyone.